Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. I want to share some setups and some results of what we had today with our subscribers, and I kind of want to fill you guys in on what went on today. Not so much for the results, but because of essentially what accompanied them. Wasn't a horrible day. It was actually, it was actually a moderately profitable day. We had four trades that triggered three that were profitable, one that wasn't. So the results were respectable, but it was also a very frustrating day. And there was actually, I think, a couple of lessons about sort of following rules and even when it gets frustrating. And so I thought it would be worth sharing here. So at any rate, of course, our day started out with the presentation of the spreadsheet that I pump out around 9:40 or so Eastern time, about 10 minutes after the market opened. So, of course, this is our spreadsheet, and this is just the top half of it that's shown in the Slack room here. Everyone gets, of course, the Excel spreadsheet. And anyway, so these were all the big gainers that were showing about 10 minutes into the session. And so you can see here, this one's up 68%. There's a whole mess of these that were up between 10 and 20%. There were a couple of big ones here. And if you recall, we ended up trading MITQ, I believe we traded. Then we'll talk about DCFC, which you didn't see, but we will talk about that because that's something I wanted to share. And we did trade BEKE today. So I kind of wanted to show you that the things that I send out to you, basically they originate from here. And after kind of giving them a once over and a scan and creating setups and all that. So at any rate, that's the way the day started here. By showing you that. So anyway, so here were some of the setups, and so let's move that over a little here. So so here was this BEKE here. Okay, whoops. So here was BEKE. So of course we had our rally-based rally here. Price came up. Okay, and at that point, then we were expecting a pullback into this zone. And so this was basically the basis for this long setup. You can see it obviously gapped up here from 1918. This thing was up about 9% or so, 8.5% when I looked at it. So anyway, so that was that setup. Then there was MITQ. Similarly, this thing gapped up from a $1.20 up to about $1.50. So this thing was up about precisely a third when I looked at this and created this setup here. So we were looking at that. And let's see what else we were looking at. There was Tiva. Again, I'll show it. Actually, no point in showing it to you. It didn't trigger. Okay, we never got the pullback here. Then there was BEKE, and this was the original setup. And I think I've mentioned in previous sessions that sometimes it's useful to essentially stalk a symbol. Just because you create a setup doesn't mean you're going to get a pullback. And so consequently, after creating this level right here at its open, that rocketed up, this then led to another level right here. And so I posted this one as well. So essentially this one became an early, obviously a trade that had a better chance, of course, of triggering by a pullback here as opposed to waiting for a pullback down here. And of course I expected this level to hold, otherwise I wouldn't have posted it. So at any rate, there's that setup. And let's see, what else did we have here? CGC, okay, we posted that one. This was, of course, this was actually a drop-based rally. So we ended up, there was a big gap up from 760. This thing gapped up, then pulled back, created a drop-based rally. And then, of course, we were expecting it to pull back and again to get a bounce out of that. Okay, so there was that one, and I think, and then there's one more, which I can't remember this one. Oh, right, and then there was CD here. Okay, so CD, again, this thing gapped up from 450, so just below here. There was yesterday's close, again, a rally, a base, a rally, bullish candles out of here, pulling back to the consolidation area, and of course, we were then expecting a bounce. Okay, so those were all the setups that we ended up with today. So if I kind of move over to the live charts now, I'll kind of show you what happened. Oh, and of course, before the live charts, the ubiquitous disclaimer, everything here I'm showing you, of course, is for educational purposes. PTL is not we're not fiduciaries, we are not financial advisors, we are not broker-dealers, etc., etc. So let's get that out of there. Okay. So at any rate, let me bring this up here and I'll show you the live charts and we'll see what happened here. And then I'll kind of go into really why I'm actually doing this quick review here. So let me just bring up the list. So of course, what I do is once I have that spreadsheet, I then create my own watch list based on that. And so essentially what happens is that the symbols go into this, and these are all the symbols that were there. And then, of course, as setups get created, I kind of segment them off. And so here are a bunch of the ones, and with these X's here, these are a bunch of the ones that we traded, and then there were some ones further below that also were part of the setups here, and so those have the X's. So we'll kind of look at all these now. All right. So, um, so first of all, here are the results from today for the ones that actually triggered. So BEKE ended up as a one-to-one trade, and in fact, we're looking at that right here. We got in right here. It just never caught fire, and it kind of came up right here to the one-to-one level, and that was really all it did. And after kind of stalling there for the better part of, I don't know, for probably probably about an hour, and this is already 2:30, 2:45, I just decided at that point, you know what, these days is not shaping up to be a rock and roll day. It's respectable, but at that point I just kind of took it off at one-to-one. Okay, so anyway, so BEKA was one-to-one. MTQ, which I'll show you in a second, that was actually a two-to-one trade. CGC actually the trade failed. And so we actually lost 1 unit. In fact, actually, I should tell you something. The trade did not fail. The trade did what it was supposed to do. Either we were going to make money and probably, look for 2-to-1, 3-to-1 on it, unless we pulled it off early, or the trade was going to lose 1-to-1. And that's part of the lesson of one has to be accepting of taking the small loss, because the alternative of accepting small losses is getting basically hit in the face with big losses. And I always compare that to getting a paper cut versus getting your arm chopped off. A paper cut is much better, even though people will say that paper cuts are the most painful thing in the world. But that's their opinion. So anyway, CGC was a -1, and then KPTI was another one. So when you net all this out, 4 units on the plus side, 1 unit on the minus side, of course, means that you're up 3 units. So if your unit is $100, you made $300. If it's 200, you made 600. If your unit's $50, you made 150. Okay. So anyway, I'm going to kind of go through very quickly these just so you can see what happened here. So BEKA I just showed you. Let's see here. Here's MTQ. And MTQ that one actually kind of started out well. We kind of got up there. And because the market was actually starting to pull back at this point, it was showing some of the market internals that I look at, the trend and a couple of other things. It was just showing that there was actually sort of a pullback in the market. And I said, you know what, we're getting 2-to-1. I'll just take that. So I kind of took the trade off at 2-to-1. And as it turned out, it actually was kind of the right move. It did kind of pop at the end here a little higher, but that wasn't bad. Okay, so anyway, so there was that 2-to-1. Then there was CSC. Okay, whoops. I'm sorry, CGC. Here we go. Okay, so CGC, and this is one of the ones that I want to talk to you about, sort of following your rules and frustration and wanting to put, as I always say to people, I don't want to put my head, I don't want to put their head through a wall. I want to put my head through a wall. And I have to say, to this day, this still happens here. So right here, we had this drop-based rally. Price came back. We had our stop set here, a nickel below at 826. This thing spiked down to precisely 826. We got stopped out right at the penny. And at that point then, it just rocketed out of there. And it went to 3-to-1, 4-to-1. It was probably about a 4.5-to-1 up here. And one has to be accepting that that's just going to happen once in a while. Because for every time that every time this one happens, that you're going to remember, oh, if I only had my stop either looser or didn't have a stop on, okay, for every one time that this happens, you're going to end up kind of seeing you'll end up, kind of seeing stuff that'll just sort of crash and burn on you. And at that point, let's just say right here we traded this drop base rally and we thought that this was going to be, I mean, I'm just making this up here as I'm going along here. But if hypothetically, if we thought this was a quality drop base rally and we had this pullback, well, if one didn't have a stop or kept moving their stop, okay, instead of taking a loss that kind of looked, basically, down here, okay, the loss goes to here, okay, and of course, if you then stay with it, okay, it just goes lower and lower and lower and lower, okay. So, like I said, for every time that you see something that looks like this, and you want to kind of, just smack somebody, kick your dog, whatever. For every time you see that, 10 times you're going to see the other thing. So always remember that, if you happen to have been in this and you happen to experience this and were really frustrated, as was I, always remember that, there's an expression, your first loss is your best loss, okay? Because basically that's the small loss, and a subsequent loss is only going to be larger, okay? So anyway, that was CGC, and then the last one that actually triggered here was KPTI, and that would be right here. Okay, and again, just never caught fire. Came into the zone. The zone held. You can see it was obviously the zone did half of its job. It certainly stopped price from going down, and it tried to bounce valiantly, but it just didn't. And right around 3 o'clock, I just again took it off at 1-to-1, because again, things just didn't seem to be happening. And now we had less than an hour to go in the session. Things were kind of flattening out, and it just again, I just decided, you know what, we'll live to fight another day. And at that point, we just had a moderately successful day. And again, just not getting greedy. In a sense, you trade the market you're given, not the market that you want. Okay. So at any rate, those were those setups. Okay. So let me show you, though, almost the bigger sources of frustration on the day. And these are things that you didn't see. So I'm going to show these to you now. So there was DCFC, and that was one of, DCFC. Here we go. So this is one of the ones that appeared on the spreadsheet. Okay. And in fact, let me show this to you actually here. Let me show you the before picture here. So this is something that I shared with, and we have the direct channels in the Slack room, and then we also, of course, have the public channel, which is the intraday setups. But then I also communicate privately with certain of our subscribers, because they communicate privately with me, and so as a result, I communicate privately with them sometimes. And so one of our experienced traders was talking to me about something, and I decided to share with him this DCFC, and I sent it to him, and I'm looking at this, and I was going, wow, I like the setup. It meets all the criteria, but it is an aggressive level, and just for various reasons, I consider it to be sort of an aggressive level, but I still liked it, and so I shared it with him, because he's an experienced trader. And so anyway, I shared that. I shared the setup with him, and I should not have clicked on that because now I lost it. Well, I'll show you how. All right, so you saw the aggressive level. To show it to you in the live chart, and unfortunately or fortunately, this thing did exactly as planned. So we had the rally, base rally. It came up. I rejected this level for some technical reasons, and this thing actually pulled back, dropped into the level, and just quickly shot up right to 3-to-1. And he sent me a note back half an hour later. Thanks a lot. That was awesome. And of course, it was very frustrating, because it would have been really nice had I shared this with you guys. The reason I didn't is because I kind of considered it to be kind of very aggressive. But I just kind of want to show you that these things do work, and also for your feedback. If you guys want to see this kind of thing, understanding that they are aggressive and that they can conceivably have a higher percentage of time where they may not work, I'm happy to show them to you. It's just that, again, I'm trying to sort of balance. I'm trying to balance performance along with risk and caution, and it's kind of a sort of a tightrope. that we kind of walk with our subscribers, that we, obviously want them to do their best, but on the same token, we don't want to expose people to undue risk. And so if people are comfortable seeing things that are a little more aggressive, we are happy to show them to you. So again, I'd actually would like, some feedback on that. Would actually be useful for everybody. So anyway, that was that frustration. And then here's the other frustration. So I showed you I showed you this CD setup here. And then I showed you that we actually then found a higher level. Okay? Or should say, we came up with this level, which is this original level right here. But then later in the day, shortly after, we found that there was another level. And again, I didn't post it because of the fact that it's a very small level. This thing was only 4 cents deep, and if you added in, the stop, maybe, it would be a 6 or 7 cent level. And as a result, and I didn't even take this trade because I just felt it was just too, it was too small. And as it turned out, it came back and it just went to the moon. Now, I shouldn't say went to the moon. I wouldn't count this stuff that happened after 3:30 because the stuff that happens in the last half hour, that to me a lot of times feels like gambling. Okay, but certainly this 3-to-1 move one could have had, and conceivably even having it go to, let's say, roughly 4-to-1, that would have all been reasonable. This other stuff is just kind of gambling, I think. But again, this is following the rules. I felt that the setup was just, the zone was just too narrow, too small, and essentially then at that point it made it too speculative because almost everything has to go right at the start. If you get any kind of significant pullback, then you're actually then immediately almost heading down to your stop, and then it's just a question of whether you hit the stop or not. But you don't really want to start out without having absolutely no wiggle room. So as a result, zones that are kind of this small, I tend not to take, and I didn't share them with you, and I didn't do this one either. But it is frustrating. But again, you have to have your rules because if you don't follow them, and then you allow something like this to go, you know what, my rule is stupid. Again, for every one time that you see something like this, probably 10 or 12 times, it wouldn't have worked. And so, again, you might have gotten 3 or 4-to-1 on this one, but if you take let's say 12 losses, each at a unit, you're down 9 units, right? You made 3 or 4, and then you lost 12 on this other one, so you're down 9 units. And to a degree, you have to always remember that. All right. So anyway, I kind of wanted to share all these intraday things with you, and particularly the frustrations of what happens when you follow rules, and at that moment, the rule following doesn't work out. Okay, but nonetheless, it's still the right thing to do. All right. And I guess the last thing, as long as I'm doing this here, we can look in on some options trades that we have rolling. Oh, and you can see I am in the market for a wireless mouse, and you can also see that I like chess. Always the danger of leaving your browser open. Fortunately, I have nothing embarrassing here, but nonetheless, and I've seen people do that, but nonetheless, be careful when you leave your browser open. So yes, I like chess. I was thinking of going to Mexico until the CDC said don't go, and I'm buying a wireless mouse. All right. So in terms of the options trade here, so anyway, so here's Dow, and here's the original setup here, and so let me get rid of that, make some room here. So here's Dow. So again, we had basically kind of a rally-based rally here, and again waiting for the pullback there. And so if we now go and actually find the chart for Dow. So here was the pullback. So we had the rally, the base, and the rally. Here's the pullback. Okay, we just reached our 3-to-1 target here. This option is now valued at 645. We bought it at 5 for 5, and so as a result, a $1.45 move off of a $5 base obviously is 29%. So that one was up 29% at the close here. And let's see, what was the other trade that we had was Walmart. Okay, so here is the setup on Walmart here. This was a short. Okay, so again we had a base drop here, waiting for the pullback up to this supply zone. with is the expectation that there's some downward price pressure, at which point then one could either express the trade by shorting Walmart stock or, of course, by buying a put. And of course, we specified up here which put to buy. This is the May 20th expiration. We're going to buy the 140. We bought the 145. So this thing basically started out about a little less than $4 in the money based on buying that option. And if we go to the chart here, let's see, where are we? And we go to the chart on here's Walmart. And so when price came down, then price. This is this line here on the 31st of January. This is when I was looking at it, and this is when it got posted. So you can see price came up here, kind of hugged the bottom of the supply zone, and in fact, I actually got in first with 2 contracts, and then I added on a third because I realized I actually made a mistake in the calculation. The trade risk really called for buying 3 contracts, and I misread my horrible handwriting, and I only bought 2. So when it got back to the zone, it actually gave me the chance to add on to the third contract. So at any rate, as of the end of today, being into the 3rd day of the trade, this thing is now up about a little over $2, and off of a benchmark of off of a $9 buy price. That puts this thing up about 22%. So that's where we are, and we're basically down around 3 to 1 here. All right. So anyway, that's what I got. So I figured I would share the intraday results, some of the frustrations of following the rules, even when they kind of bite you, and of course then a little roundup on the options trades. So anyway, that's what I got, and I will see you next time.